Oh boy, here we go again. Man, what a squeeze this afternoon. It's been one hell of a last 24 hours, hasn't it? That big dump off Meta last night and this pump, this huge squeeze going higher after Microsoft and Google report here this afternoon. Welcome to peak week earnings season 2024. Now, most important thing though is anytime we see a big short squeeze like this after earnings, there are two trades we look for the following day. We're going to cover those two trades in a lot of detail here tonight. I want to make sure everyone has a roadmap to make some money on Friday. Now, before we jump in and talk my favorite trades for another big day coming tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for sticking around tonight, watching, tuning in, supporting the channel. Enough of the intro, though. Let's go make some more money on Friday. Charts are all ready to go. Man, oh man, what a wild last 24 hours. Nasdaq triple Qs are ready. The E-mini and the SPY is ready. I have four, I think, pretty obvious clues right now on these charts in front of me. They're telling us where the winning trades are going to be for tomorrow. Two out of those four clues are right here on the 60-minute. If you recall, earlier on in the week this week, the buyers took control when they jumped and separated off that 21 EMA. And as of last night, Meta's failed earnings last night. Markets collapsed. The bears had everything they needed. All they had to do was hold that pullback and run back down, but they couldn't, right? Bears failed to hold the moving average, and we squeezed back higher. That's a very convincing sign now. The buyers are in full control of momentum. Buyers holding above the moving average, bears or sellers unable to hold below. Very convincing now. The buyers are in firm control. The second clue, though, on the 60-minute time frame, if you are a student of mine here at SOT, you know that anytime we see a channel that gets broken like this and we go back and retest that high, oftentimes this pulls back and gives us a second leg in the same direction. In our video class, we call these a channel break and retest. So a lot of convincing evidence right now. The buyers are able to shrug off those bears, looking pretty bullish going to the end of the week here on Friday morning. Now, the direction right now is kind of the easy part, right? You probably don't need me to tell you we're pretty bullish right now. A lot more difficult is timing the entries. We're going to drill down to some faster time frames here in a moment and talk about entries for tomorrow because that's where the money is made, right? Direction is kind of the easy part. Let's grab our schedule though first before we talk about entries for tomorrow, because there are two things on my radar for tomorrow. One of them, you take away the earnings reports this week, and this is the biggest news of the week. Without the earnings reports, that personal income number is a huge, again, it's probably the biggest news report of the week because it is inflation number. So keep that on your radar for tomorrow. That will definitely get the markets moving early tomorrow morning. And then don't forget, tomorrow's a Friday. Fridays aren't your typical day. I have what's called the Friday mindset on a Friday morning. So here's the deal. The markets get illiquid as the day gets older. And we as traders, we get lazy, we lose discipline, we make poor decisions as the day gets older. So my mindset on a Friday morning is to get in as early as I can. Take profit quickly, remove risk, but we know that markets love to run on Friday afternoons. So get in early, remove risk early, take some profit, but I always like to leave a little piece of that trade to run because Fridays love to run. Get in early when I'm at my best. The markets are nice and liquid. Get rid of risk, take some profit, and let that sucker run. Because go back and look at a couple Fridays ago, and you'll see a lot of Fridays, 3 out of 5 Fridays, they just run and run and run in the afternoon. So think about that Friday mindset for tomorrow. But big time, big news tomorrow. Personal income and outlays. We have no more earnings until next week. We survived peak week of earnings season. We got one more big news event, though, tomorrow morning. And next week, we have another round of not as crazy as this week, but another round of earnings next week. We'll talk about that, of course. We come back on Monday night in next week's videos. Now, back to our charts, though, because we know when the news is tomorrow, but we don't trade the news. We trade off the charts. The money is made on the charts, as we always say. Let's now cover our favorite trades here for tomorrow. I mentioned before, market looked pretty bullish right now. Buyers held off the moving average, and the bears had everything they needed. Sentiment, news, all they had to do was hold that pullback and keep control, and they couldn't do it. Looking pretty bullish right now, but now let's talk talk about the entries for tomorrow because that's kind of where the tick charts come in handy. We do not trade off time charts in our trade room. I think tick charts make everything easier, especially pattern recognition. This is a 7,000 tick chart linked up there in the upper left-hand corner. And if you're watching for the first time right now, that yellow line is the only indicator we need in our trade room is 21 EMA. There are two additional clues here on these tick charts that really make it easier for us to plan the best entries for tomorrow. First things first, we have this huge move higher in the wake of the Microsoft and Google announcement this afternoon. Anytime we see a big move like this, short squeeze like this in one direction, there are two different types of trades we look for the following day. Let's cover the first one here on the S&P, and then on the Nasdaq later in the video tonight, we'll talk about that second one. The second one isn't as common, but I'll tell you it's a whole lot easier. So I'll give you a reason to stick around all the way to the end. You'll want to watch the whole video here tonight if you like making money. Most important thing is, anytime I see a big move like this, I don't want to buy high. We're up around big levels of resistance overhead. We get some big news coming tomorrow morning. What I want to do is I want to buy nice and low. And the way you buy nice and low after a big move like this is a two-legged pullback. Now, two-legged pullbacks are a pretty simple idea. I want to get below the moving average and think about a measured move let me teach in our free video classes. One leg and two leg. When I think of a two-legged pullback, I always think of a little bit more than a measured move or 100% extension. When I see a big move like this, I expect a two-legged pullback into support and a retest of that high. The second clue we have right now on our tick charts is that news spike, right? That news spike. Now, we talked about this last night. Anytime we see a news spike, we use that for a measuring spike, right? You can see an example right there on the Meta news spike. Yesterday, it's no surprise the market went right down, took out that news spike measured move. If you watched last night's video, we talked quite a bit about that. Now, why is it important? Well, because now we have a news spike here right now on this earnings report. And so if I can get my entries down here in that two-legged pullback, right, I'd love to use that news spike now to tell me where to take that final profit target. So we know right now, big move higher says, look for that two-legged pullback and that retest of the high. The news spike says, use the size of that news spike and project that back up, and that will give you a good idea of where that target is. Now, I think most people understand the idea of a two-legged pullback, but here's the problem though. Timing that entry, because I'm not going to blindly buy down there. We don't pick tops and bottoms. It's kind of a rookie mistake, right? We're not going to blindly buy down there. What you want to look for is a failure into bear trap combination. Imagine now we get that two-legged pullback. Again, a bit more than a measured move. I'm not going to pick that bottom right there, right? That's a rookie mistake. What I'll do is I'm going to wait for rookie bears to come in and chase after it. If I can get the bears trapped in a couple times here, I'd like to use my two-try failure pattern. Let me teach in the free video course. If I can get bears trapped in twice, now we know where their stops are. And they can use their stops to fuel that move going back up to retest the high. And again, I'll use the size of that news spike to tell me now where that final target is going to be. Now, before we go back to retest the high, I like to look for one more add-on entry, which uses a bear trap. I call this a failure into trap combination. Whenever we see a big move higher, we do not want to buy high up into resistance. We want to buy nice and low to get that low. Two-legged pullback, a bit more than a measured move. Trap those bears in. Don't pick that bottom, right? Trap those bears in. Use their stops to squeeze with a failure pattern. And again, get that higher high in price and that bear trap pattern right below that low. News spike, measuring spike. We now know where the target is as we go. Now, sometimes these two-legged pullbacks, they're really strong on the way down. Sometimes we get two bites out of the apple on this. Sometimes we'll get that entry bears once, bears twice. That failure pattern will snap back up, and oftentimes they're going to hold the underbelly of that move and try one more time. This is something we have to be aware of for tomorrow, especially because we have that big personal income number at 8:30 Eastern time. It may get a strong shot lower. It may roll over and retest that low. We're in overall bull market right now. This is not a reversal, but think about this. Anybody who sold that pullback right there, they're taking their profit down at that low. In these situations, we call these double bottom reversals. It's a second bite at the apple, same pattern here. Don't pick the bottom, get the bears once, get the bears twice. That's a horrible spot to sell. I would never want to sell right there, right? But hopefully some rookies aren't watching my video tonight. Hopefully they'll sell into it. We can use their stops to fuel. It's that failure into that bull trap. You know me, I love traps, right? Bull trap scenario going back up to retest the high. We know how big that news spike is. And of course, we'll use that for some targets up overhead here. All right, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns. You're making money with failures, loving the traps. But if you're watching for the first time right now, I get it. I do things a bit differently here on this YouTube channel. If you're here for the first time, if you want to learn more, if none of this is making sense to you, don't you worry. I teach all these entry patterns. I have hundreds of examples of failures, traps, and a whole lot more, covered a lot more detail in our free video classes. I'll put a link up top there for you, upper right-hand corner. Grab that link that popped up and take that free trading course because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then once we know where to find the winners, we time the entries with failures, traps, pullback, strength trades. You'll learn all about it in that free course, guys. The markets are way too good right now not to be making consistent money. If you're not getting the money out of the markets you want right now, if you're missing the best trades each day, hit that link up top there. Take that free course. It's perfect for someone to make the jump into full-time trading. Give you an easy roadmap so you always know where the best trades are going to be each day. Also be aware too, I'm going to put all the important links tonight in the description of the YouTube video, put the free class links down there. We trade together every day in our trade room. All the information for trade room links on the description. I post a lot of updates on X throughout the day. If you're on X or on Twitter, give me a follow. All the details, description of the YouTube video. But that's the main sequence, that two-legged pullback, trap those bears in and get that bear trap on the way back up to retest the high. And again, don't be surprised if we get that strong shot lower, they roll it over and we do it again with that double bottom reversal. Now, let's talk about one more variation of this that happens quite a bit during big news events, and that is a V bottom reversal. Let's say, for example, I love the idea of a two-legged pullback, trap the bears in, squeeze those stops and run back up again. But sometimes there are so many buyers down there, we don't get that bear trap or that failure pattern, we call it. We don't get the signal. Sometimes what happens is it'll squeeze right back up and V bottom. And you know it's a V bottom when it begins to grind higher. Once it grinds back up, the hardest part of these is not chasing after it, because what we want to do is draw a trend line off the highs, bring that trend line down off that low, look left, find one of those prior swings, and this is where the money is made right there. It's that first test off the low of that channel, and my favorite trade is always a bear trap like this. It doesn't have to be a bear trap. It could also be a failure pattern. You guys are learning in the free video classes, right? Failures into pullbacks, failures into bear traps on the way higher here. But again, I like to buy all the way down here. I'd like to trap those bears in. But again, we may not get that signal. And my job is to give you guys a clear roadmap just in case we don't get the perfect scenario, right? Markets are ugly sometimes, and that is a great way to trade this. Just don't chase after. That's the key, right? Don't chase after it as it runs higher. Now, I'm sure a lot of people right now are wondering, how do we sell this, right? How do we sell this? Because if we're expecting a pullback, right, how do we short this thing during the pullback? Well, first of all, we always know anytime we try picking a top on this, it's always going to be less reliable. The odds are not going to be as good to pick the top on this because all of that bullish momentum. Now, if I don't have momentum on my side, right? If we're so bullish overall, I need to trap in some rookies up here because we can all agree, right? This is probably not a good spot to buy. Not a great spot to be a buyer up here. I wouldn't want to buy up here, but if I have some rookies coming in and I get the rookies trying once, rookies twine twice, I can now use what's called a crown reversal pattern. Now watch this pattern closely because it's pretty simple, but a lot of folks, they get it wrong. Once you learn this reversal pattern though, you will start seeing this everywhere. It's a lower low in price and a little move right above that prior high. What's basically happening here is the buyers are coming in, buying it once. Right? Goes lower, buyers want to buy low, they try to buy it again. Now think about that point. At that point now, all their stops, all their pain is right there, right? So once we get that nice juicy red candle closing firmly below that 21 EMA, bingo, now we can sell those stops. Again, we call these crown reversal patterns. They're basically a bull trap pattern we teach in the free video course. Now remember, once again, right, this is going against all of this momentum. So in my world, this is a half size position. This is a quarter size position. We always go big on our best highest percentage setups. This will not be a full size position for someone like me. So take that into account if you're trying to sell that reversal off of that high. And remember, this also goes right hand in hand with that two-legged pullback, right? So one leg, two leg, again, a bit more than a measured move. There's no reason why we can't grab that crown reversal, get that two-legged pullback, trap those bears in, squeeze those stops, and snap right back up to retest the high. If we're lucky, we'll double dip that sucker, crown reversal into that. Again, what was ultimately a failure pattern, call it a bear trap pattern if you want to, on the way back up. And remember, I'm simply drawing the screen right now. I have hundreds of examples of these inside that free video course I mentioned earlier, and we'll keep an eye on that Microsoft news spike, and we'll project it off the lows here and figure out where that final target is tomorrow morning in the trade room. All right, guys, that's one. I mentioned earlier, whenever we see situations like this, we see two types of trades for tomorrow. The two-legged pullback is one of those two game plans for tomorrow. Now let's talk about the second one for tomorrow. I mentioned earlier, the second one isn't as common, but I'll tell you, if we get it, it's a whole lot easier in my opinion, because the second scenario now are some range-bound markets. Now, over the Nasdaq right now, Nasdaq and the S&P are very, very similar, so pretty much everything is interchangeable. As I mentioned earlier, the Nasdaq buyers got that juicy jump off the moving average. The buyers had all the control of momentum, and then of course Zuckerberg comes out and spoils the fun, drops this thing lower, and the bears, all they had to do was resume jumping off the moving average, and they couldn't do it. Now we have the buyers holding above the moving average and the sellers unable to hold. In my world, that is a bullish market. And again, we have that channel, that break. Whenever we see a channel that breaks and retests like this, we expect to pull back in another leg, another symmetrical leg in the same direction. Again, that's kind of the easy part, right? The direction aspect of this is kind of the easy part right now. Over to our tick charts here. Now, on the tick charts, same basic stuff, right? We have that nice big move higher. Anytime we see a big move like this, I do not want to buy high. I want to buy nice and low. It's that two-legged pullback, that failure pattern, that bear trap, right? Going back up to retest the high. And again, we know that the size of that news spike becomes the target going higher. Look back at Meta, right? News spike going down. No surprise. Well, they struggled to take it lower going there. You need to learn how to use news spikes and strong moves. So that was the game we talked about on the S&P a moment ago. The same game plan applies to the Nasdaq as well. Would love to get that strong run, that double bottom, that second bite at the apple as well. Now let's talk about range-bound markets, because we get some big news tomorrow morning. Got more big earnings coming next week here. There's a chance out there we may not have anybody take profit. This market may be so bullish, nobody dares to sell it, and we may end up going sideways up here. Now, ranges. If you know me, you know how much I love ranges, right? Ranges are, I think, the easiest way to make money. Let's talk about ranges. There are two types of trades I always look for when it comes to ranges, and I wish I had a crystal ball for tomorrow. I don't know exactly where that range will be for tomorrow, but let's plan on us going sideways up here somewhere. The most important thing about ranges is that ranges act like magnets, and ranges love to rotate. Ranges act like magnets, and they love to rotate. So they love to go up, rotate down, rotate up, rotate down, and these are usually roughly about equal. Nothing that's perfect, but roughly about equal. We like to use triangles. We like to use pendulum swings. You'll learn a lot more about that, of course, in the free video classes. There are a lot of examples of that in the free trading course. So ranges are magnets, and they love love to rotate back and forth. There are two types of trades I look for in a range that's bullish like this. The first one is to look for support levels underneath that trading range. I had a channel on here earlier off the high, right off of that low. That could easily be an area of support. I always like looking for trend lines off the lows. That can be an area of support. So bottom line is I want to find an area of support underneath that trading range, wait for that run going lower, and this is where the 21 moving average comes in handy. I'm not going to pick the bottom, right? We're not going to pick the bottom on that because for all I know, the one time I try to pick that bottom is the one time it keeps going lower forever. I'm not going to pick that bottom. I wish I had a more consistent way to get the exact bottom, but I don't. It's unrealistic to expect to pick the tops and bottoms consistently over a long period of time. What I'd rather do is get that same failure pattern, right? Trap those bears in, again, around support. That range above is the magnet. Now think about that failure pattern. And of course, that bear trap pattern, which again is a higher high in price and a trap right below that low, right? That same sequence, you want to memorize that sequence after a big news or a big breakout or a big move in one direction. Now remember, ranges love to rotate. So the amount below the range can now project up above the range, and now we know where that market wants to go. What I do is I'll take a half off at the top of that trading range. There's usually some sort of trend line up here somewhere, a quarter off, right at that trend line. And always, especially on a Friday afternoon, right, leave that runner for a final quarter off at that pendulum swing. Again, it's that failure pattern, that two try failure. It's that bear trap pattern. And again, think about that rotation as we go higher. Measure the amount below, project there above. That will give you an idea of where to leave that runner for tomorrow. Now, let's kick this up a couple notches, right? Because this is kind of the basic principle of a range market. What is a little more difficult sometimes is this. We oftentimes, after a big move up like this, everybody starts beating their chest, right? Everyone's all excited being so bullish, and the market will pop up overnight or tomorrow morning. Okay, these can be dangerous. Now, sometimes these become breakout pullbacks, and we'll talk about how to know when a breakout pullback is there in a moment. Right? We'll talk about a breakout pullback in a moment. But oftentimes, after a big move up like this, these are rookies buying up here. Right? They're not professionals buying up there, and oftentimes we'll get one of those crown reversals. Remember that on the S&P, right? That lower low in price, right? Crown reversal, and it will spit right back down again, right? Rookies come in and they chase it. They're not aware how high up they are buying, relatively speaking, to that big move we saw this afternoon. So we don't buy up there. Anything will sell up there, right? That crown reversal, rookies once, rookies twice, and that short back down again. Most important thing, though, is now think about the amount above, measure that back down below, okay? This now is where we want the entry. Now remember, at this point here, it may keep going, right? I have no crystal ball. I'm not that good at picking tops and bottoms. Maybe you are, but I'm definitely not. I would rather not pick the bottom on that. I would rather wait for the pullback to the moving average, right? As they begin pulling back to the moving average, now, is this a good place to sell short? Please say no. Please say no. The job is saying no, right? We don't want to sell short going lower, right? We want to sell high, sell up here. Don't sell underneath the range like that, right? Now, again, a lot of rookies don't know that yet. They don't watch these videos, right? So trap those rookies in, right? You begin to trap in, right? Don't be the trapper, right? Or the trappee, if you will. One try, two try. There's your failure pattern. And again, there is your, right? There is your bear trap pattern going higher here. All right, and once again, we know the market wants to go. It wants to rotate back and forth. Rotation is your new favorite word whenever we have a range on the chart. Same thing. It's that failure pattern, that two-try failure, squeeze the stops, and again, that bear trap pattern, higher high in price, and that run back down again. So don't fall for that fake out breakout above that high. Now, I'm sure some folks are wondering right now, when does a breakout happen? When does a breakout happen? Breakouts happen in two situations. One situation would be we go below the range, we get those bears trapped in, we run back up, and we go convincingly through the pendulum swing. The pendulum swing is your best friend when it comes to range breakouts. So once we know how much below it, right, if we just crush it right to the highs up there, if we just blow right through that pendulum swing, a convincing break of that pendulum swing, now what? Now we go out and look for a breakout pullback. We let the market run higher, and then we look for that same two-legged pullback, right? That one, that two, again, a bit more than a measured move, right? Think about A, B, C, D. We don't pick that bottom. We trap those bears in. 1, 2, same thing, right? Rinse and repeat, guys. Once you learn what works, do it over and over again. People often ask me, why don't I do new trades and new setups? Because, guys, once you learn what works, why go anywhere else? Keep milking that cow, right, until it runs dry. And we know, of course, those failure into bear trap patterns work so well. That's one way to know when you have a breakout into a breakout pullback. It exceeds that pendulum swing. Now, sometimes we have the benefit of that. Sometimes what happens is you go into a trading range and the market breaks out. It breaks out like that, right? This is a tough one. The key here is holding off the moving average. We mentioned earlier that whenever we see buyers jump off the moving average, that is a sign the buyers have control. That same technique that we talked about on the 60-minute time frame, right? That same thing. We're bearish until we get above the moving average, we pull back to the 21, and we jump. Right? We call these 1, 2, 3 moves, right? 1, 2, 3 reversals, 1, 2, 3 breakouts, 1, 2 jump, right? Same idea here on a range market. Again, this will apply to the S&P as well. So if we end up going sideways here, and this is probably the least likely for tomorrow, but hey, I want to make sure we have a game plan for it. If we do pop up, do not trust that breakout. Do not trust that breakout. Make them hold that pullback. And if they hold that pullback and go, yeah, I get it. I want to be in that too. Right? I want to be in that too. I get it. I want to be in that trade. But the odds aren't good enough. That's a low percentage trade. Let it go, right? Let it go. Wait for that deeper two-legged pullback, because that's where the bigger money is, right? This is a 20% trade, right? Maybe a 30% trade right there, right? I mean, 30 of 100 times will work, right? This right here is an 80% trade in my opinion, right? 80% trade. Which one do you want? Right? Which one do you want to build your career on? 30% winners or 80% winners? I think we all agree, right? Wait for the best ones, right? Don't let FOMO trade for you. That's a FOMO trade right there. That's a FOMO trade. And trades like that oftentimes get whacked back down, and the bigger money is down underneath that trading range. All right, guys? So hopefully that makes sense when it comes to ranges. Hopefully we'll get some ranges tomorrow, because I think ranges, even though they're not as common as two-legged pullbacks, ranges are a lot easier to make money with, because once you find that range, you trade that rotation with those failures into trap patterns. All right, guys, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, every morning, guys, come trade it with us. The easiest way to start making consistent money in any market is to come out and learn and trade along every morning in our trade room. I'll put all the important links, the free class links, the trade room membership links, our Twitter feed information, all in the description of the YouTube video. I would definitely recommend start first on the free classes, get a good foundation, and something tells me I'll see you trading with us sometime soon as a member of the morning room. Any questions, concerns, any issues getting started, please don't be afraid to call the office or use live chat. Megan and I are always here to help out, answer questions, so don't be a stranger. Give us a call in the office. We're always here to help out every step of the process. Boy, what a wild week. It's been a great week so far. We got one more day left. How will that news come out tomorrow morning? Will we get a two-legged pullback or a sideways range tomorrow? Only time will tell, but now the game plan is all set. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.